After a number of years of top quartile performance, the North Star SCI Managed Fund had a bit more of a challenging quarter, slightly underperforming its benchmark. From an asset allocation perspective, we got most of our asset allocation spot on, being overweight domestic equities relative to our peer group, as well as offshore equities. And both of those areas of the markets did particularly well. What we didn't get right was being overweight fixed income versus cash. And if you take the All Bondy year to date, it's actually delivered negative returns. That said, our fixed income component of the portfolio was in fact flat. So we did add some good attribution in terms of fixed income. And with respect to what's happening in the markets from an equities perspective, offshore equities for the period did approximately 5.1% for the quarter. We did 4.9%, and I must say we're actually quite pleased with that considering the massive rotation to value, and our portfolio consists of high quality positions. So we really did manage to hold our own in a very tough space for us, considering we're a quality at a reasonable price manager, and the cyclicality of the market has really been driving equity returns. From the South African perspective, on the equity side, market did about 12.6% for the quarter. We did 10.1%, so definitely lagged a bit there. And the main reason being underweight resources, which did almost 19%. Financials did about 4%, and industrials did 13%. We've been quite overweight industrials. So certainly lagged about 2% relative to the index. That said, we had an exceptionally good March, outperforming the SWIX, the cap SWIX, which is our local benchmark. Overall, fund we think is very well positioned. Upside to intrinsic value is double digit. Bonds are offering high real returns even in our bear case scenario. So we just think that there's a lot of upside in the fund, and it's very, very well positioned for the year ahead.